All right, today we're diving into something that is about to shake up how companies in over 140 countries talk about their performance. It's a new accounting standard called IFRS 18, and it's set to completely overhaul the profit and loss statement as we know it. But to really get why this is such a big deal, we need to start with a pretty simple question. So think about it. You see one company report $1 billion in profit, and then another company reports the exact same number. Are you actually looking at the same thing? Can you really truly compare them side by side? Well, the answer, up until now, has been surprisingly murky. And that gets us right to the heart of the problem that IFRS 18 is here to solve, the comparability problem. For years, the rules gave companies a ton of wiggle room in how they presented their income statements. And this often made a simple apples-to-apples comparison between two companies a huge headache, even for professional analysts. So under the old rules, this is the kind of thing you'd see all the time. Check out those different subtotals. Company A is talking about its adjusted operating income, while Company B is highlighting its profit from operations. What do those even mean? Well, they meant whatever the companies wanted them to mean. They could be hiding or highlighting totally different things, which makes a fair comparison, well, pretty much impossible. So to fix all this confusion, the International Accounting Standards Board, the IASB, has stepped in with IFRS 18. You can think of it as a brand new global rulebook that's here to bring some much-needed order and consistency to the world of financial reporting. So what exactly is IFRS 18? Well, it was just issued in April 2024, and it's all about presentation and disclosure. Its main target is the statement of profit or loss, what most of us just call the income statement. The whole goal is to make it way clearer, way more disciplined, and just easier for everyone to understand. And listen, this isn't some far-off concept we can forget about. This standard becomes mandatory for annual reporting periods starting on or after January 1st, 2027. So these changes, they are right around the corner. Okay, so how does IFRS 18 actually fix the problem? Well, the first huge change is creating a mandatory structure for the income statement. Think of it like this. Instead of just dumping all your financial results into one big messy pile, you now have to sort everything into clearly labeled baskets. Every single bit of income and every expense now has to be classified into one of these 5 specific categories. The most important one is operating. This is all about the company's main business activities. Then you've got investing, which is stuff like income from investments. After that is financing, which covers the cost of borrowing money. And finally, income taxes and discontinued operations get their own spots. And this structure, it is absolutely non-negotiable. And with those new categories, we get 3 new mandatory subtotals. And the big one, the one everyone's excited about, is operating profit or loss. For the very first time, we're going to have a single, universally defined measure of a company's core performance, calculated the exact same way for every single company. That's a game changer. Let's look at a quick example to see this in action. Here's a typical income statement from before. You've got your revenue, your costs, and you get down to a profit before tax of $320. But see how other income and finance costs are just kind of thrown in there? It's not really clear what's from the core business and what's from other stuff. Now, let's restructure that exact same statement using the new IFRS 18 rules. The bottom line, profit before tax, is still $320. The company isn't more or less profitable, but look at the clarity. We now have a clearly defined operating profit of $350. We can see exactly what came from investments, and we see the financing costs are separate. You instantly get a way better picture of where the money is actually coming from. Now, the second big change takes aim at those custom, adjusted profit numbers that companies love to shout about in their press releases. These metrics aren't going away completely, but they're about to be put on a much, much shorter leash. You've definitely seen these before. Adjusted EBITDA, core earnings, underlying profit. They're supposed to show you management's special view on performance, usually by kicking out expenses they don't like. The problem is, it's been the Wild West. There were no real rules. So, IFRS 18 gives these metrics an official, and yeah, it's a bit of a mouthful, name. Management Defined Performance Measures, or MDPMs for short. The bottom line is, if a company is going to promote a custom profit number, it now has an official label, and more importantly, a whole new set of rules to follow. Companies can still use their custom metrics, but And this is a big but, they have to be completely transparent about them in their official financial statements. They all have to be disclosed together in one single note. The company has to explain exactly how it's calculated. And crucially, they have to provide a reconciliation showing step by step how they got from an official number like operating profit to their own adjusted number. They even have to show the tax impact. It's all about bringing everything out into the open.
Okay, so we've been getting into some technical accounting stuff. What does all this actually mean for you? Whether you're an investor, a manager, or just someone trying to figure out if a company is healthy, what's the real-world impact?
Let's boil it down. Here are your key takeaways. First, comparing companies is about to get so much easier. That new standard operating profit means you can finally make real apples-to-apples comparisons. Second, you're getting way more transparency on all those adjusted numbers. No more black boxes. Third, you get a much clearer picture of performance by separating operations from investing and financing. And all of that leads to the most important thing of all. It helps you make better, smarter decisions with more reliable data. At the end of the day, IFRS 18 is all about bringing clarity and discipline to financial reporting. It's forcing everyone to use the same language and the same structure when they talk about their profits. And that leaves us with one final big question to think about. Now that the rules are clearer and everyone has to show their work, who are going to be the real winners and who will be the losers?